Hello, everybody, and welcome back. We're here with our next session today, which is the next big bets for VCs. And our host for this panel is nobody less than James Haft, the founder of PALcapital. So, James, could you join us up here? Yeah, hi. Here you are, James. Welcome.
Now I'm nervous.
Here you are.
Thank you, sir.
You're very welcome.
I'd like to not fall off the stage.
And next, we also have Mars Leung, a business development manager at P2P. Mars, can you join us up here? Yeah, hi. Hey, how's it going? Yeah, nice to meet you too. Welcome.
Hey, nice to meet you. Thank you. Thank you, sir.
We also have Alan Lee, investment director at Wan Asset Management. Hi. Hey, nice to meet you too. James.
I'm sitting. I apologize.
Next, we have Shawn Tan, general partner at Trive Digital. And last but not least, Jack Ratkovich, investor at Hashkey Capital. I'm going to hand this over to you. And,
thank you very much.
So that you have one microphone on each side.
I don't think I need this.
Okay, sure.
And there is no real use for
Right? Yeah, so it just makes me nervous.
Oh, sure.
In that case, take it away. Thank you, gentlemen.
Hey, guys. Thank you guys for coming. We're talking about VCs and the next big thing in Web3 and crypto. So quickly, let's introduce ourselves, but like a minute or less, okay? So I'm James Haft. I'm the founder of Crypto Mondays. I was the chairman of the first publicly listed Web3 company called DLTX. And I've recently formed DAIS, which is the Decentralized AI Society, which is about making sure that AI works for humanity instead of the other way around.
Hey guys, I'm Jack. I am a VC with Hashkey Capital, which is a large venture capital firm based out of Singapore. Before that, I did a small DeFi company called Tender Finance, and before that I was at PwC.
Hello guys, so I'm Mars, thanks for having me. So I'm with the P2P staking validator provider. So we help institutional clients with staking like $7.5 billion at today. So that's my introduction.
Hi guys, I'm Shawn. I'm a general partner at Trive Digital, where we invest in early stage opportunities in blockchain and AI. We are mainly focusing on pre-seed and seed opportunities within infrastructure, finance, and entertainment. And we are a global fund, so we've deployed in the US, Europe, East Asia, Southeast Asia as well. So yeah, thank you.
Hi, my name is Alan. We invest in the next big things. This is our style. I'm an investment director of one of the largest or maybe most aggressive single family office in Hong Kong, heavy investing in crypto VC projects. So crypto family office is what I always call. We implement ABC strategy, including A for AI, B for biotech, and C for crypto. And I'm the crypto guy. I used to be in a financial guy, working in US investment bank, Hong Kong Central Bank, and also hedge fund before I become a blockchain VC.
So let's start first with looking a little bit about how we evaluate deals and what we look for. Like I have a rule: if someone walks into my office and says, "If I just had the money, I would do X, Y, or Z," and I kick that person out of my office immediately, because what that statement really means is if I don't get the money, I'm going to go do something else. And if I give him my money, he's going to walk away and I'm never going to see it again, right? So I only work with people that would actually follow their dream and would work on what the project is, whether or not they're getting paid, because they have so much passion for it that passion is going to take us somewhere which is probably different than what he's pitching, but his passion will take him through to not leave me alone on the end of a branch. So,
yeah. Sure, I can go first. Yeah. So I think the number one thing that I look for when I'm looking at a project is I take a good look at the founder, right? A lot of things, like you said, passion, but also like relevant experience. I see a lot of people who have like, for example, like this revolutionary idea of how they're going to completely change private credit, but they have absolutely no underwriting experience whatsoever, right? They just have lofty ideas and are not going to know how to execute properly on something like that. So. Team background is a really big thing for me, and also like founder psychology. You know, some founders are just like meant to be great, and you can kind of get a sense from that when you speak with them. So yeah, I think that's probably the most important thing that I look for is a very solid founding team.
Okay, so to answer this question, I would want to like give brief introduction. So we're not a VC. We are like staking validator provider. But then like every day we're talking to hundreds of VCs. I mean, not hundreds, but yeah, we are talking to hundreds of VCs on how to generate yields for their locked tokens. And so obviously we'll see the latest trend on how the crypto market is going. And also we're heavily invested our like resources, our like technologies into staking, liquid staking, and also restaking protocols. So I think, so my focus is, of course, staking and related stuff. So, so starting from now, if you guys will talk about like how you want to understand the market, I will see like how the money flows. Like lots of people are right now saying that, hey, their investment is not competing better than Bitcoin. They would rather just hold Bitcoin. So I don't think this is how VC works, because you guys would want to invest in the next revolutionary or innovations in the market to get a fortune. But then, to be honest, yes, this is the reality, right? Holding Bitcoin might be outperforming the general altcoin market. But then, yeah. Here, I would want to talk a bit more later. But then here's what my thought is, like how the money flow, and then we'll follow the next trend.
Thanks. I actually agree very much with I think what James said, right? Like I think when you make early stage investments, it's a bet not on the business model, not a bet on the product, it's a bet on the people, right? So if your business has some flaws, you can still kind of change it if it's the wrong market, if it's the wrong product market fit, if you should be selling something else, right? You can always pivot to something else if your team is great, right? Now the question is, how do you determine whether the team is great or not, right? I think one of them, as I think you have also mentioned, is that they have the relevant background. Two, I think these guys are here to stay. Right, you don't want guys who can't weather the storms and I'm out, I'm back at a cushy job, at the next turn of events, right? So I think for us, basically, we bet very heavily on people. We tend to want to meet every single founder that we deploy capital into in person, right? There's a sense of a qualitative kind of vibe check, right? Like, whether these guys check out or not, whether, there's this thing where, there's like your dogs and a beer. There's this test, right? Where you say, would you trust this person to take care of your dogs? And also, would you also have a beer with this person, right? And I think that's a good, kind of test to see whether these are guys that you trust or not with an investment. So yeah, thanks.
Yeah, I agree. So also, number one, definitely founder. If the founder really know how to hustle, and hustle until they find the product market fit, this is number one important factor. And no one can say, oh, I'm the smartest guy in the room. You can't say that, but he can have the charm to attract all the talents to work for him, to work with him. This is also one point that you have to look at. And if he has the charisma to attract all the talents to work with him, and everyone hustle until they find the market fit, this is number one important thing. The second thing is we love investing in tech-driven startup. So we always look at tech white papers, and they really write, very difficult from Stanford or MIT or maybe Harvard, and those are something that it also very important, because it's a monster, it's a tech monster no one can compete with you if you are the one who create that type white paper. Number 3 is the go-to-market strategy, and they have to hire the right marketing. They have to understand the market right, especially in crypto. Crypto is crazy. Every week we can change the narrative totally upside down, and you have to catch up with that with your tech, but you can change a little bit on your narrative and attract the right people. Like build a very strong culture that they really believe your project will succeed, and the flywheel effect will come.
The crypto is great for people with ADD because you don't have to focus more than a week before it changes. Since you brought up crypto, it's a perfect segue. Let's talk about tokens versus equity, right? Because I look at a lot of deals coming in, and I would rather take tokens. I prefer the liquidity. I prefer the whole market and energy. But a lot of times when you have tokens and equity, there's actually a conflict of interest between the two, where value may flow to one at the expense of the other. And so it's kind of difficult as the investor to understand, even though I want tokens, you have to defend myself by looking at what's happening in the equities, because I understand where the value is accruing. So how do you guys deal with that?
So this is a tough question, and I think it's partially tough because the space is evolving, and we're in kind of this like weird adolescent phase where for the last few years, I mean, the typical model is like a safe plus a token warrant or a token side letter or like SAFT, whatever, right? So you get both typically. In the past, the model for VCs in Web3 has been a very short time horizon, has been like 4 to 5 years, and then I want to be out of your project, like tops, and then I want to be out of your project, which is very atypical in Web 2, right? So a big important part of the pitch, and I think unfortunately this continues to be an important part of a founder pitch to VCs even today, is your pumponomics. How are you going to pump your token and ensure that the VC is going to be able to get out? I think this is problematic, and I think the space is maturing to a point where I'm not sure if this is going to be sustainable anymore. I think that the proper way to look at venture in Web 2 is in Web 3, the way that's going to be the most profitable is to have a longer time horizon, more similar to Web 2. So I think part of me wants to say that in the short term, value is going to accrue to tokens. In the long term, value is going to accrue to equity, because when the value accrues to a brand, in the long term, it's going to accrue to the equity, right? And tokens tend to go up and then down. But I also think that retail is starting to wisen up, and they're starting to get really sick of getting dumped on by VCs. So it's very, very hard to market altcoins to retail, which is typically where VCs historically have found their exit liquidity. So yeah, it's an evolving situation, and I think the VC strategies are going to have to change.
And so let's not do across. It takes too long. When you're looking at a deal, what are you looking for? Start on the end. What are you looking for in a deal? Something walks in the door, and are you looking for a topic? Are you looking for a market size? What is it that says yes, this is the good fit for us?
Yeah, it will be product market fit. I think it's a very buzzword, but I would say you have to make sure your product they will generate profit in the long term. So it has to be a unique idea, or maybe they have validated this idea on one chain and you put it in the other. It works as well. Like you look at DYDX and someone would move the same thing to another chain and it works again. So this works as well. Although this is kind of not something that VC will invest, but we have to validate the market and also look at the founder's quality as well. Yeah.
And what type? Are there certain? Do you want to use the? Is that working? Oh, sorry. Are there certain functions or applications that you're looking for? Like, is DeFi or is DeFi past? Are we starting to look at consumer apps which really haven't hit off in Web3 yet?
So I think we look at main themes. As I mentioned, we focus on infrastructure, finance, and entertainment, right? But these are all very broad. Now, the risk with focusing on a particular vertical is that what is hot today may not be hot tomorrow, and no one can really predict, right? So back then, if you remember, when 2 years ago, right, at the bear market, Luna was the first to fall, right? And then everyone said DeFi is bad, let's go to CeFi. And then FTX went down, right? And then everyone said, CeFi is bad, let's go to DeFi, right? So I think narratives are changing. It is very risky to bet very heavily on a particular narrative, especially if that narrative is hot and hyped in the world of today, right? Because if it's already hyped up, you're probably too late. Right, so it's about kind of keeping an open mind, looking for hidden gems that you haven't, kind of seen before. People haven't realized it yet, and then making a leap of faith to kind of make that, put that bet, place that bet, make that investment. Yeah, thanks.
And let's move this towards staking to make it easier for you. And so there's. Why should a company have liquid staking? What does it add to an economy, and why is it interesting to an investor?
Yeah, before answering that, I want to answer the previous questions about tokens versus equity. And without token, there will have no staking. So it's a very basic, economy or game theory that actually everyone could participate in a network. I will use Ethereum blockchain as an example. So if there is a party who really want to secure the network, here comes staking. He can participate in it with staking. And then there's the users who use Ethereum blockchain to create the dApps, but he afraid the security problem. And here, and so that's why there's a game theory that certain people want to sacrifice their capital, their resources to build on that security for those developers to create a vibrant environment. And this is also why blockchain is so powerful, right? It's so transparent that everyone could do the on-chain analysis on the transactions. How about equity? So yeah, maybe that leaves some traditional finance people could counter-attack my point. But then I think trading on-chain has a higher transparency than token transaction. So what was the second question?
So why is it attractive to me as an investor to have a liquid staking token in an ecosystem?
All right. So I think it's supporting the security of the blockchain in the sense that we hope that there is a better future. So we hope to deploy the current capital we have for a better future, right? So as an investor, I think you guys will also want to have some social responsibility, but then at the same time, you will gain economic incentives from the blockchain itself. So this is why staking is lucrative to a lot of investors. And at the same time, because a lot of VCs, they have locked up tokens during their investment period, and then they have nothing to do. So that's why they have to adopt a staking strategies for the recent Tron blockchain, Val blockchain, and even Babylon is coming, and it's at the testnet phase, and the investor want to test it out, and then they are gaining the points, and this is how the crypto market works. So I wouldn't want to spend so much time on elaborating, but here comes my understanding on that.
And Jack, if you're sitting at your desk waiting for the next thing to come over the transom, right? What are you looking for right now? Is it consumer oriented? Is it DeFi? Is it infrastructure?
Yeah. So I like things that make blockchain useful and that make money. So for me personally, my areas of interest are. RWA, payments, and DePIN, I would say, are probably the three areas that I'm in this present moment the most stoked about. Those are areas that I've been looking at pretty heavily over the last year and a half. I mean, I'm a generalist investor. Everyone at Hashkey is, but we all have our little areas of particular interest. Those have always been mine. The problem with some of those is there's a very small percentage of projects in all of those spheres, or each of those spheres, especially DePIN and RWA. That are investable from a VC perspective. So figuring out where the value is going to accrue, and where what's going to create the biggest market size for us to for example, I really like private credit, right, as an asset class, but it's very difficult for us to invest in a particular private credit protocol, especially there's a lot of risk involved with that, right? So as an investor, I would say like something like Plume would be a really good investment because a lot of the private credit value is going to accrue, and just RWA in general is going to accrue to something like that, right? So, yeah, that's kind of how I'm looking at the current market. What is making blockchain actually valuable? I'm not super interested in infrastructure personally, not to say that other VCs aren't, but infrastructure's been the big play for the last however many years, right? I'm of the opinion that if all we ever build is infrastructure, like what the hell are we building the infrastructure for? And in terms of consumer, there are some consumer applications, like things that might make DeFi accessible to people who like don't need to actually go on chain, right? Like Seashell, something like that, right? That could be interesting, but in general, I tend to have a rougher time wrapping my head around the long-term vision for most of the consumer projects that I see. Yeah.
So one of the problems I see, you have something to add? Go for it.
I would love to add some points to both of you. Number one, yeah, think about what's the natural demand. Think about like POW back-to-back Bitcoin. People mine Bitcoin, and then people have to. So there is a demand for the miners, and also then generate cash flow, right? And the second derivative with that, the miners have to pay the electricity, and it could be in US dollar or in renminbi and or in other currency. But what they get is Bitcoin. Then there will be a lot of demand of the derivative, like they can short futures or maybe short options. So you can see what the natural demand is. And this is the POW. And back to POS, why we have staking, LLT. It follows the same concepts. Why there is a natural demand of a validator, and why there is a natural demand of staking, restaking. This is something that is about the natural demand. Think about the natural demand, you know where is the recurring revenue that I mentioned, why you have to look for long-term profitable business in the blockchain area is. Yeah, and you kind of mentioned RWA and also DePIN. To launch a project, you have to have two mindsets. First is the short-term mindset, and the other one is long-term mindset. Long-term mindset is to be profitable and make money and grow a big treasury and have a natural demand, like people use your service and they are willing to pay for it. This is the long-term mindset, and it applies to bull market and bear market. Short-term mindset is only works for bull market. It's attention economy. How much MAU, how much DAU, and then you create the hype and give a good reason why you are listed in the big exchange. So you have to keep that in mind that, oh, I grow that kind of customer so that, oh, some big exchange say, oh, you can convert some users to my exchanges and they can trade futures on the exchanges. That's why I give you a very legit reason why you list my token. This is a short-term mindset. And of course, it's only works. So attention economy works, but it only works in the bull market. But you, as a founder, you have to have both things on your mind. And back to the question you mentioned, DePIN. I think DePIN, most of them is related to hardware. I just talk about the hardware DePIN part. You have to distribute hardware piece by piece, right? You have to like charger or whatsoever, and you have to sell your hardware, small miners and stuff at home. It's very slow. So I think DePIN may not make it this cycle, maybe next cycle. So we have to wait for 4 years. Yeah. I will give it, yeah, the second part.
We disagree.
The second part is the RWA. I think you can't compare with BlackRock or Fidelity when they launch like treasury bill and anything on top, right? You can't beat the big players. But so I don't think you can easily make money as a issuer of RWA, but you can make money if you can use their product. For example, someone buy a $100 treasury bill, put it there, and then I'm the RWA or maybe some leverage protocol, so I can put there and then lending, borrowing, and then I can use that huge amount of RWA asset, and then I can leverage and lend and borrow. I can earn the interest, I can earn the liquidation fee. So I will rather look at stuff that build on top of the RWA, but don't try not to be the issuer of the RWA because you can't compare with the big players. Yeah.
I mean, just on the deep in thing, man. So I think generally I agree with you on like most deep in like this is a problem. This is a problem that you talked about that prevented us from investing in a lot of deep in projects that frankly ended up doing pretty well. But
For now.
Yeah, but I gotta say at the same time, man,
they're
like,
burning cash most.
But there are deep in because there is an issue of scalability, right? Like once you start, like when you're producing only a small amount of hardware, that's very expensive, right? But there are deep in projects now that are building things like that are like creating like allowing people to use their own hardware they have at home and so on and so forth for deep in projects. But there's also deep in so we invested in a project called Kiva AI. I don't know if you're familiar, but without getting into too much detail, data labeling is a very important part of the machine learning economy. And basically what data labeling is like, let's say that you want to train an AI to understand how to code. You have to like have people go through and do what's called supervised learning, where they manually highlight areas of code and say, this is what this does. Or if you want to train it to identify a red hat, right? You showed 1,000 pictures of people wearing red hats, click and draw a box around the red hat and say, this is a red hat. The biggest company in Web 2 that does this is called Scale AI. And it's got like a $7.5 billion valuation, and it got there in 3 years of existing, right? So it's a very important but very niche part of the AI, like ML economy. We invested in a project called Kiva AI this year that is using blockchain-based incentive mechanisms to make this a much more like scalable business model. It would take me like a very long time for me to actually go in detail on like how this is the case, but it takes something that typically requires a very centralized, like training heavy onboarding process with like warehouses where you have a ton of people in like the Philippines and Vietnam doing data labeling on like in very crowded environments with a lot of managers to ensure a high quality of data, and turns it into something that you can do at home, be onboarded in 15 minutes and do it on your computer or your cell phone. So it makes it a much more scalable.
But is it hardware related or software?
That's what I wanted to say. Is you specifically went after the hardware part of DeepIn, but the valuable part of DeepIn is going to be software, not hardware. Because the idea is going to be, how do you aggregate a large number of equipment that already exists, that's being underperforming, it's underutilized, and how do you make it attractive using a crypto incentive structure to get them to point their compute at your model? And what's going to happen is you're going to start to have marketplaces where there's several opportunities and where you're going to choose where you point your compute because you're getting the best return. Right? So we're going to run out of time soon, I believe. So what I want to do is each of you name one project that you're looking at right now that you think is exciting that people should look at to reference. And I'll start with something called Morpheus, so MOR.org. It is a protocol for private LLMs and agents where you completely control your own data and don't share your data with any third party unless you get paid for it. And the company is a protocol, decentralized, has no people, no CEO, no lawyers, bankers, or accountants, no bank account, no treasury, no phone number, no physical location. So basically, it is a platform by the people, for the people, where you earn tokens by performing services that other people use within the network, which then enables you to have your own AI LLM and your own agents and the privacy and control of your own data. So MOR.org.
Yeah, so I just mentioned Kiva AI and the DeepIn sphere. That's really cool. But RWA, Plume Network, check it out. I think they're actually talking at a later panel today here. They're taking, I think the next logical step for DeFi is that there has to be some kind of like actual fundamental value outside of just staking, right? Like there has to be an external value. RWA has been incredibly boring for a very long time. Yields have been very low, and there's not been any actual actual DeFi for RWA. And there's been a whole lot of problems with like KYC-fi ecosystems and walled garden ecosystems when people have tried to fix that. And Plume has elegant solutions for all of those issues. They're creating a very solid DeFi ecosystem. I think it's going to be one of the biggest projects in Web3 period, and probably it's definitely going to be a top RWA ecosystem for sure. Like one of the two. So yeah.
Check out p2p.org.
I said no self-showing.
Yeah, no self-showing. So, but I want to talk about the TADA. I'm not sure if you heard of the Telegram, like Grab, the Drive. How do you say that? share
So-
drive,
so-
the taxi app.
Yeah, so Tada is actually our portfolio company.
Really? Oh, wow. So they are like Ton sponsored $60 Singapore dollars for you to travel, and I think this is really a mass adoption thing for crypto. I mean, like we often say that, hey, when is mass adoption? For real use case, I think Tada is doing something, fantastic.
Yeah, like so. Just to add on, I
Free
think.
advertisement. That's what
Yeah, just to add on, I think Tada has done really well. Like I think no one knows that they're blockchain. No one knows that they're running on blockchain, but they're running on blockchain, right? They are the official Token2049 ride-hailing partner. They're giving out 4,000 free rides on their Telegram mini app. No, but this is not shilling, right? They are quite big by now, right? But I was going into more of our investment thesis, right? So what goes along with this is also, the ability on the whole narrative on how you onboard the next billion users. And I think to that, that for every one of us here, right? If that happens, that's going to be a great thing, right? So the question is now, how do you get there? So what we like is, good UX, ease of onboarding, what makes people feel good when they use something. They may not necessarily know that it's Web3. They may not necessarily know it's blockchain, but that's where, we get the most, we get the most upside. For example, you would not know that Tada is kind of blockchain Web3, but we're kind of mentioning it here, right? And I think in that same vein, we have a portfolio company that is doing something like that, crypto asset management, simple stuff, right? Nothing revolutionary, nothing that you would, go, oh no, this is solving a new problem, somewhere else, right? We like concepts that have been proven, tested, and are likely to succeed, right? And that company is called Clink, right? They do a crypto asset management platform, right? And I think they gamify the user experience when you put your assets or you put your money with them, basic simple stuff. And I think that's the stuff that I like, Thanks.
Yeah, short-term hype, I think it will be BTC-Fi. I love BTC. There's no yield right now, but in the future, there will be a lot of future airdrops. And I think they will get a great hype for 3 months. After 3 months, I don't know, but it may succeed, it may not, but I love to see how it goes. We are also investor of Unisat, one of the largest Bitcoin decentralized wallet. And also, yeah, they build the pizza, they build the... they build the fractal Bitcoin, they build a layer 2, something like that. So Bitcoin may be a good narrative for this cycle. Next cycle, I don't know, but this cycle, there at least a great hype. The second part, I would love to long-term trend, I think it will be cryptography. So cryptography, it includes zero knowledge proof, it includes MPC, multi-party computation, and also FHE, fully homographic encryption. So yeah, consider your medical records, consider your personal data. It will be easily just one hack by North Korean government. Yeah, your data. Yeah, they will get all your data, and you will keep receiving a lot of phone calls and stuff, and fake emails and stuff. Right? Crazy. And FHE. ZKP and also MPC will fix it. So there are some MPC blockchains and also some FHE blockchains and a lot of applications. That will be the long-term trend. Also, I want to add a point is that I think for the mass adoption part, we have to partner with Web2 companies. Consider Telegram. Maybe one day we can persuade Spotify. Suddenly, Spotify, there's a Spotify wallet. Consider how many crypto users we can acquire. Consider McDonald's. Someone will have a McDonald's app, right? Suddenly, McDonald's has a McDonald's crypto wallet. Yeah, maybe that will be another way we can go. Actually, how many people has a Starbucks application? Yeah. Behind is actually Polygon, if there is a Polygon wallet, but you don't feel it. So this is something that we have to push, and make a mass adoption. Right. So I will end here.
I think that's right. I mean, people don't understand the technology is actually not the interesting thing as an investor. What's interesting is how big is the user base, how
Yes.
how addictive and how habituated is the activity, right? And how valuable is that activity? Then I didn't mention technology once, right? That could be Bitcoin, it could be Ethereum, it could be blockchain, it could not be blockchain. So what creates value is your community size, right? I always tell people, if you came into my room and you said that you have something that generates 50% a month and it's done it every month for the last 3 years, and then you showed me a door and you open it up and there's mice running around in a dark room with notes in their mouth, I wouldn't run away. I'd say, how expensive are the mice, right? Because you know what the returns are. And people get lost on this technology. I think that there will not be mass adoption of blockchain until you don't know that you're using blockchain, which was said before, right? Because you don't click on things on your phone because it's blockchain. You'll click on it because it's faster, it's cheaper, it's scalable, it pays you for doing it. Exactly. Look at this cool thing, when I press the button, I show my friend, right? That's what creates the great businesses, right? And so the idea of going to the Web 2 companies is exactly right. Because once you have something that works, you have to go fishing where the fish are. And who has the fish? It's the Web 2 companies, right? So they're the obvious people to partner with, in looking at this. And we didn't really talk about that. But that's really, to me, it's this, how do you get to scale? The people that want my attention, I'm an art history major. I don't even understand code, right? What I understand is, how do you get people to focus and press buttons on your phone, right? And that lights change and they're happier after the light changes. That's the only thing that matters to me.
Absolutely, 100%.
So we're done? All right. Keep going? All right, so what would you like to talk about, Jack?
Oh, you're kind of putting me on the spot here.
You got the hat, you got the whole thing going.
If you want, we can do 1 or 2 questions.
Sure.
Yeah, let's do questions by the audience.
I like that better. Any questions? Thank you.
I'll take one of the mics over.
Does any questions? Yeah.
Yeah. Does anybody have a question for the audience?
Hashkey question.
Of course.
Question hour. That is confidential information. I am not allowed to.
Hi guys, wonderful panels. Thank you very much. Question is, how would you handle the risk of African market? Do you invest anything there? And how we can work together?
Yeah, that is a good question. I would say, not just the African market, but emerging markets in general represent a large area for opportunity, especially in areas like payments. If you look at the largest stablecoin by market cap, it is a stablecoin that I doubt most people that you would meet at a Web3 conference have even touch, which is USDT. And the reason that USDT is so huge is because it's on Tron, which again, I doubt most people at your typical crypto conference use. I certainly have never used Tron, right? The reason for that is because people in Africa and people in South America use Tron and USDT for payment infrastructure. And I think that there is a very strong opportunity for disruption there. I think that with the volatility of currencies among Africa and South America, it makes sense that people are rushing to hold assets that don't depreciate at such a rapid rate. And especially in these areas where there's so many people are unbanked. So I think the way that you underwrite that risk is by getting to know the founders very well, making sure that they have very legit backgrounds, knowing where the companies are domiciled, and making sure that there's not anyway, so it largely has to do with the team, making sure the team is very legit and that everything checks out there.
So I actually used to do emerging markets investment banking on Wall Street, right? And so I went into crypto because it is so similar to emerging markets banking, right? It's fear and greed, right? Which has to do with, which drives all the equations. And what you see is that China was the same as Russia, was the same as Eastern Europe, was the same as Latin America, because it's not the asset class that drives the markets, it's humans. And humans are the common element in all these markets, in Africa, in crypto. You just go across, it doesn't really matter what the asset class is, humans behave like humans. Fear and greed, it drives everything. Fear of missing out, right, drives everything. So you have these boom and bust cycles that go through. So I think Africa will have, it's like the eye of Sauron, right? And when it catches on, boom, there'll be the Africa era, right? And we're just waiting right now. But the truth is, it's a better market for crypto than the United States. And we have Visa, we have banks. We supposedly have rules, but I'm not sure about that. But so I think Africa will have its moment. It's just a rotation, and humans can only focus on so many things at a time. And right now, there's other things taking the mind space away. So the Eye of Sauron isn't on Africa yet. Another question?
Maybe one more question from the audience.
Maybe somebody else want to answer?
We'll talk about Africa.
Oh, wonderful.
So the way I see, no, and I'll give a short disclaimer. So I haven't looked that much into Africa. I've looked at a couple of deals, right? The way that I see Africa itself, I think it's very similar to the way that you see other emerging markets, right? So things that would apply to other unbanked or underbanked populations might work there as well. Like I think on your comment for Tron, like I've used Tron. It's cheap, it's fast, yeah, it's fine, yeah, but it works. But I think in terms of the use cases, right? Like I think the core use. So if you look at financial technology, fintech, right? The core users of the core financial needs have not changed in the past 200 years. It will not change in the next 200 years. People will still need a way to lend money, borrow money, transfer money, store money, right? And I think the only thing that is the difference is the mechanisms that you meet those needs, right? So maybe now I do it faster, maybe now I do it safer, maybe now I do it cheaper, right? And I think, which is why our view is that blockchain is the next logical step for fintech. Right? And I think what you will observe in Africa, as with a few other emerging economies, is something called leapfrogging, right? And I think this has applied previously to where people go from personal computers to not having personal computers to mobile phones directly, right? And you will see that kind of change happening within fintech as well, right? So you have people not being able to access having a bank account or like a credit card, but they will be able to pay on their phone, digital payments, mobile payments. And I think remittances for Africa, inter-country and inter-region would be very interesting in that respect. Yeah. Thanks.
So also, you have to remember, the original cryptocurrency was in Africa. Okay? It was phone minutes on M-Pesa because inflation was so bad and it was illegal to hold a dollar-denominated asset because the government didn't want you to be able to get around their controls. So you would buy excess minutes, and a minute would change in value as a market price, and you'd be able to go to the store and use your minutes to buy your milk or your goods, and so you wouldn't suffer the inflation because you actually had a dollar-indexed asset. So I think that you're going to see crypto is already big in Africa. It just wasn't blockchain, right? And leapfrogging is 100% what's going to happen.
Yeah, I want to mention that they always play around that. We call it mobile money, right? It's also local currency. What if? Yeah, because of blockchain, they can actually receive USDC or USDT and it's in. I heard that a lot of African people would love to have US dollar. They think it's a store of value better than their local currency. So blockchain can help. What if we can build a blockchain protocol and request all the companies in Africa, they can pay their salary in US dollar terms in currency? Really, I think I haven't tested the hypothesis yet, but I think, yeah, I'm very close to Vala, which is the largest African crypto exchange. I think this will change the market, but you can help me validate the product market fit. Yeah.
I think we ran out of time. So thank you so much, guys. This was great. Appreciate it, and have a great day.
Thank you very much to the panel. We're